through the prism of Oak Hill Advisors, how does the credit landscape look for you right now? Is it getting tighter?
No, I would say that there is more opportunity than it is tightening. Certainly the banks have pulled back structurally over the last number of years, but there's an extraordinary amount of capital available for companies. The lower end of the consumer side of the market is definitely tighter, but there is so much liquidity, there was so much stimulus, and that's really setting up for a pretty extraordinary credit environment.
So when you use the word extraordinary, what went through, Danny and I caught up before we had these conversations, so you use a word like extraordinary environment. That says to me we're nowhere near the top of the credit boom for your part of the world and your industry. So do we grow significantly from here? Because the banks are coming in and snapping at your heels, aren't they?
Well, the banks really have been held back by regulatory concerns and capital concerns, and they have really evolved into more of a syndicator as opposed to a principal investor, certainly in larger cap credit. And so when I say extraordinary, I just think that the opportunity to earn double-digit yields, which has been reported certainly broadly, is an extraordinary opportunity. Again, as you mentioned earlier, Steve Schwartzman mentioned earlier, when we were at rates of 0 and spreads were 4 or 5%, you were only making 4 to 5%. And today, the opportunity to make genuinely double-digit yields with a 5% plus base rate and spreads of 500-600 basis points, you have the opportunity to make 11+% on an unleveraged basis for senior secured risk, which is lower risk. And we have not had that opportunity really in decades. I've been doing this now for 36 years, and it was really back in the late 80s when base rates were much higher and you could make double-digit yields. But today, the opportunity to make, again, 11, 12 unleveraged returns in senior secured risk feels extraordinary to me. And to your question of growth, I think this is structural. I think we're here to stay because the opportunity set, because the banks have pulled back and the evolution of private equity is such that the demand for credit is there.
To that point,